Good afternoon and welcome to the Tonya Esquibel Real Estate Show, here every Saturday from noon to 1, helping families in Middle Tennessee since 1997, and would love to help you identify your purchasing power. You can give our team a call, 615-300-0794, 615-300-0794. My co-host in studio with me every Saturday, Kim Hollingshead with Hollingshead & Associates. You do have a choice when it comes to a title company, and I think a lot of times people don't understand the importance of having a really good real estate attorney represent you when it comes to your closing. And so we're kind of doing our theme. It is October. Are we so not enjoying this weather? No, yes, we are. It is beautiful. So beautiful. Fall is actually my favorite time of the year. And so we're kind of doing our theme today around Halloween, about spooky real estate stories. And how we can be the Ghostbusters and come help save you if you get caught in the trenches with the witches and the skeletons.
Yes.
So anyway, Kim, thank you so much for always taking your time every Saturday to join us, educate our listeners. I know it has been a very interesting year. I'm excited about our show. We're going to be talking about just the importance of title insurance, I went through that 4 years ago. So I understand what you're going to be talking about in today's show. And I've been in the business for 29 years. And so it was just more of a trusting fact of whoever's in the contract that says I need to close with. And that is why I always say you have a choice when it comes to a title company. Don't just go with who's in your contract. Make sure, just like you have a choice when it comes to your homeowner's insurance, your mortgage company, you have a choice with your title company too. And so we're going to share about that today of how important it is to make sure that you're aligned with the right title company that is going to protect you and going to protect one of the biggest investments that you're going to make. So it's almost like you have auto insurance, but you didn't get the right protection. And so now you've paid for this car, you're still credit liable for it, but you didn't get the right protection. And so here you are with a broken down car, a wrecked car, and you still are credit obligated, just like you would from a mortgage standpoint. So that's why it's so important to make sure that you have a title company that has your back, that explains the process, not just shows up and smiles and say, hey, sign the documents. So I think those are things that we want to focus on, because I feel like we're going to probably get into an environment that's even more important than ever, because, interest rates not only have risen substantially, the largest increase we've had in 2 decades.
Yep.
Almost 3 decades, honestly. And then you look at, inflation at a 40-year high. Unfortunately, we are in, Middle East is in war right now, which that is, now we've got 2 wars going on over there. So those are just scary times for people. And so I feel like that, we might see sellers that are like, hey, I just want to sell my home right now. And those buyers are going to pick up those homes and they need to know, is it assumable? How does that protect the title if it is an assumable loan? And just making sure that you're fully educated, because in my 29 years, I've not been through this season of the mortgage. And I say that because I know history repeats itself, but we never went through a global pandemic either. And we did that together. And now we're going through a war, which is almost on, the verge of being World War III. I hope it doesn't, but you need to protect your assets. So we're going to talk about that. Other thing we want to talk about is rental rates are rising. We have so many down payment assistance programs. Also, I want to talk about during this show, so it is a myth. You don't have to have, 20% to put down. You don't have to have an 800 credit score. There's programs out there for first-time home buyers. First-time home buyers is, I've not owned a home in less than 3 years. However, some of our down payment assistance programs, you don't even have to, you can own a home. You can sell a home and still get down payment assistance. So
that's awesome.
We just have so many different avenues with that, and I just want the listeners to know that. The other thing, too, that I would like to focus on a little bit is when the market and rates start to rise, everyone thinks that the credit lending gets really tight. Sometimes I don't know if the credit lending gets really tight, or is it just you're not working with the right local expert. So I've had 2 clients this week that have come to me. I've banked with this person for 30 years that got denied, got them approved. Another client went to another lender and the DTI was too high, which is debt to income ratio. So we were able to call that person yesterday to say, we have you approved.
Wow.
So I think that's really
great.
important too. And then I want to touch base on, at the end of the show, just, I love education. So do you.
Yep.
And so I just did a training for one of the builders, one of the largest builders here in Middle Tennessee. And it was supposed to be an hour, and we went for 2 hours just because there is so much that's changing in our industry. But it's not all bad. It's just getting the education around why is it a good time to buy right now. So if you'd like to find out your purchasing power, give us a call, 300-0794, 300-0794. So Kim, I don't do a good, I tried to do before we started our show a spooky sound, and it did not work out very well. So I think I'll just go, Boo, tell us your story. Your spooky title story.
Scary title story?
Yeah.
So, yeah, I mean, I think that it's kind of everybody's like horror situation, and worst case scenario nightmare is losing title to your house. Nothing would be worse, right? And unfortunately, because of the nature of the way that title to real estate transfers in this country, in this state, it's not like a car title. It's not like you go down to the county clerk and they can tell you exactly who owns this car, and they can tell you exactly who the lender is. It's all just recorded, and it changes. Those records are updated as title transfers. That's not the way that real estate is. You may have a most recent deed of record, but that doesn't tell you who's on title. The title attorney tells you who's the actual owner of the real estate. And that's because real estate can transfer at the moment of death of one of the owners by operation of law. You don't have to record a separate document. You don't have to go down to the county clerk's office. You're not updating any records, but the deed is not accurately reflecting the true ownership. So what title insurance does is it helps, one of the things that a title company does is we conduct a search and an exam, and our core function is to determine who the owner is, and also to make sure that the deed is drafted correctly for the buyer. So, and let me give you guys the story now. Here's the fun, juicy part. That was kind of the setup. So, title company, not us. This was a title company that was closing a transaction for a well-known kind of national real estate company, and they kind of always close with this particular title company. So that's going to tell you the level of service. They don't really care because they're closing all the deals. They're doing them at a massive discount for this real estate firm. It's worked into the contract. So,
transaction.
There's no service really. So then this client went to go sell her home to this large real estate company, and they were going to buy it, but the title company conducted the exam, and the last deed was in the name of, let's just say Sally and Joe, comma, joint tenants. So how do they own title? Are they at the time that they purchased, they were unmarried, so they were Sally and Joe, unmarried, taking title as joint tenants, but they got married just a few months later. So they owned this home in their minds, thinking that they were the owners of this home as a married couple. Unfortunately, he passed away just a couple years after they purchased the home. She's been making all of the payments on her own. She refinanced the loan and everything all by herself. Well, she goes to sell it, and because of the way that the deed was drafted, she cannot sell her house now.
Why can she not?
So because his children, he has 5 children from a prior relationship, will not sign on the deed to convey his 1/2 portion of title over to her. They will not agree to that. So why does that happen? Would 5 children even be involved in a real estate transaction? Because Tennessee doesn't have anything known as a joint tenancy. That way of owning title called a vesting, that vesting doesn't exist in this state. You've got 3 options. You own it as a tenancy by the entirety as a husband and wife. They were not married, so they didn't have that option. And then you can own it as a tenants in common, or tenants in common with right or survivorship, meaning that if either one of the owners passes away, the title automatically goes to the other. But because there's the deed was drafted as a joint tenants, it just defaulted to the tenants in common is how they own the home in that vesting. So when he passed away, his 1/2 share did not go to her. it went to his 5 children. And that's because whoever drafted the deed made an error. Did not have a conversation with the 2 of them, didn't ask them, hey, how would you like to hold title? Would you like your half to automatically transfer to her if something happens to you, and then vice versa? Or would you like your half to pass to your kids? No, they didn't take any care. They just wrote joint tenants on the deed.
Very interesting. I have a question. We got to take a break right now along that story. So you're listening to the Tonya Esquibel Real Estate Show right here on Super Talk 99.7. WTN, don't go away. We'll be right back. Welcome back to the Tonya Esquibel Real Estate Show here every Saturday from noon to 1. If you're just now tuning in, my co-host is here with me, Kim Hollingshead, real estate attorney with Hollingshead and Associates. And we are actually, our theme is spooky closing, spooky real estate, because it is Halloween. But we basically are talking about how important title insurance is to protect you from your mortgage, from your home, from your investment. So if you did miss the first episode opening of the show, we are on Spotify, podcast, also on YouTube. You can check us out on social media as well. So Kim, my question, you left off with the way that the title was done, the deed was done. So
now she's not the owner of this home. She only owns 1/2 of the title plus her spousal share of 1/3, but the kids now share.
They have more than majority?
Yeah. No, 2/3, 2/3 of 1/2 share. It's very complicated, but the kids have a vested interest. So if they're not in agreement, she can't sell the house.
Okay.
And, so you would think, usually it's not a problem. The kids are like, yeah, sure, no problem. This family is estranged. And so she doesn't have a relationship with them. They're her former stepchildren. Everyone's grown. These are not small kids.
Yeah.
So because of that, she's having a hard time getting in touch with everyone, and it's turned into a nightmare. She should not be in that situation in the first place. This is the other problem in the story. There's no way to fix it.
Let me ask this question. So I went through that with my grandparents raised me, and so I was part of 6 kids. And grandkids were involved, biological kids involved. It was,
oh my gosh.
It was held up.
Yeah.
So my question is, because they didn't do title correctly either. He was good old grandpa, just handshake, never recorded it. So when we went to go sell some of the property, we couldn't because we could never get a clear title. So my question is, he did have a will, but what if someone had a will or a trust that specifically gave that property to her? Would that override the title issues that they're dealing with?
So yes, if there was a will, but in this case there's not, so you have to fall back on the statute.
Okay.
Right, and then that's the problem. Now, there's no way to fix it. Because we could go to court, we could seek a reformation of the deed, okay, but it'll be contested by the kids because they're not in agreement. So there's really no way to fix it. Now, your next one is it a claim on the title insurance? I think it is, because it's caused a title problem that makes title unmarketable. And that's the reason why you need title insurance, right? But the title insurance insurer, the underwriter, the company that issued the policy, disagrees. And they don't think they owe coverage for this. So this is going to cost this lady about $50,000.
Wow.
If they ever agree to just take their cash, it's called a partition, their part of the proceeds of the home in exchange for a deed. And that's money she should never have to pay.
Right.
But it was done because there was a mistake on the front end of whoever prepared her deed. So that's why when you say you get to choose your title insurance company, it is important who you close with. It is really important that you're closing with someone who has an attorney taking a look at everything and reviewing all the documents. And in Tennessee, you don't have to be an attorney to own a title insurance company. Does that mean that their service is not as good? Absolutely not. I know a lot of amazing owners of title insurance companies that have been doing this for 30 years, 40 years, and I will put them up against an attorney any day of the week. But they are not trained in the law in the same way that an attorney is. Does it mean she can't draft a deed? No. Okay, they can do a great job drafting a deed. But you just want to close to someone who can really address all of your issues, especially in today's market. There are more high-risk transactions. Are you seeing this? Higher risk borrowers, higher risk properties, properties with more problems. People are doing more transactions on things like mobile homes. Like you talked about assumable mortgages. People want to do like risky things like assumables, which you wouldn't have seen that a few years ago. That's quite risky.
Yeah, I've not done an assumable in my entire career, but that word is out there right now.
That word is out there, yeah.
And what does that look like? So my other question is, so normally the mortgage company or the bank draws up the deed of trust. Or was this a cash deal, or did they have a mortgage?
So they did. They had a deed of trust, and the mortgage company, at the time that they purchased, and this was back in 2016, in the closing instructions stated that the deed of trust was to be prepared with them as joint tenants. Now, here's the difference. My company, the employees and the attorneys who work for me are trained that if they see something like that in the closing instructions, that they're required to send an email to lender to advise them on how to properly draft that deed of trust, because a joint tenancy is not a viable option in Tennessee. We're going to have a conversation with that buyer. Do you want it with or without survivorship? And then we will advise a lender on how to properly, why? Because we're insuring the first mortgage as well. So we want to make sure that's
maybe
correct.
It was an out-of-state lender that just didn't know Tennessee law?
Oh yeah, that happens all the time. Like why, and that, exactly, Tonya, like therein lies the problem. So many out-of-state realtors, out-of-state loan officers, our lenders are doing business here in the state. We had the conversation, I guess it was like a month or two ago, where we talked about if you're getting a loan, you're buying a home, use a Tennessee loan officer, use a Tennessee realtor, a Tennessee title insurance company, and that is, and you just brought up a perfect example of the reason why.
Yeah.
What can go wrong? They're not familiar with the laws of the state.
They're not. I see so many cost estimates from loan officers out of state that don't even have all of our fees.
Oh,
and
yeah,
so,
the recording, the state transfer tax, none of that's correct.
None of it's correct. And so the consumer automatically thinks, oh, as a lender, your fees are much higher.
Yeah.
And I'm like, no, your loan officer is not, like, these are third-party fees. These are not lender fees. Like, regardless of what lender you use, this is the cost of this.
Right.
And
they just misquoted you.
Exactly. But it's so hard for a consumer to understand that because, and sometimes they won't call you back because they'll be like, can I get a cost estimate? And then you're like, following up. And then you find out from the realtor, oh, your closing costs are too high. And I was like, no.
They're not too high. They just left off $3,000 for the conveyance tax. Honey.
Exactly. Yes.
I see that all the time in my practice. They leave off title insurance. Yep. And they don't include like title exam fees because they don't understand how our out-of-county rates are calculated here in the state. Or they just charge like a $35 closing fee. And you're like, what title company do they think that they're using that's only going to charge $35? You can tell when you look at a loan estimate that they're just, they're lowballing every single fee to just try to earn the business.
Yeah. So that's why we really encourage everyone to use local experts.
Yes.
Like Kim just said, local lender, local title company, local real estate agent, local builder. They do have your best interest. So if you'd like to find out your purchasing power, have any questions in regards to a realtor recommendation, a builder recommendation, obviously we would love to help you from a local lending and title standpoint. Give us a call, 615-300-0794, 615-300-0794. Again, if you're just now tuning in and you've missed the opening of the show today, we're kind of doing a fun theme around Halloween, spooky tales about real estate. And you can check us out on our podcast, Spotify, also YouTube, and our social media channels to catch up on the show. All right, so title is important. I realize that more and more just due to my circumstances too. And I think that's what I love about you, because not only do you take your time to talk about it on the radio show, but you have your own podcast and reels that you do on social media to basically help people understand that. And I know you've got some exciting things coming up for 2024 to really help people understand title and the challenges from a real estate standpoint and also from a consumer standpoint. So excited to see how you continue to help educate people on that. Because even being in the lending side of the business, I did not really understand title insurance for years because no one really broke it down. It was just part of the process. But
it's like shrouded in mystery. It's like, what is title insurance? It's just some extra fee on the same. But it's like I tell that story earlier. But that's if you want to stay up at night and worry about your assets and what's going to happen to you, and your family. if you go. I mean, that's a great example, right?
Yeah.
Couples who purchased homes before gay marriage was legalized in this state may think that when gay marriage was legalized, now all of a sudden they own title in a certain way. They may not. You know, and especially if you're working
Depends
with
on what your deed says.
Yeah, if you're working with the trust, or you know, but I love what you said about the about using out of state, you know, lenders and how fees can be misquoted, and it's so confusing to consumers. And that right there, that confusion, that uncertainty, those are the negative emotions that we try to eliminate out of the closing process and of the home buying process as much as possible. And one of the things that we do to help support loan officers, actually, we do it to support loan officers and borrowers to make them feel more comfortable with what they're doing in the loan, is we actually have a, you know, like a little fact sheet that we give to buyers when they first, you know, are welcome to the title insurance company. And it's basically a breakdown of what are all of the closing costs I can expect to pay. So they're hearing it not from a loan officer, but from the title insurance company and the title attorney to confirm what they're seeing on there. And we have clients who compare what we say is normal to what they've been quoted.
Yes.
And it gives them that comfort of knowing like, oh yeah, these are normal fees that I'm paying.
Yeah.
And we give them the normal expected range of fees that they can expect to pay as well. And then we always provide a preliminary CD so they can see what are the actual transfer taxes, recording fees, title insurance costs, right? And then some of the contractual obligations to help them feel more and more comfortable along that process.
Yeah, I think that, like to tag on to that, like I had a client, he's moving from out of state, relocating in, and he was like, these closing costs are so high. I had no idea they would be this high. And we're not charging discount points. Like, you know, lenders now are charging discount points. For this particular client, we did not have a discount in there at all. So our lending fees were very much in line of what any bank is. So he just was not familiar coming from out of state with the fees that you were just talking about.
Yes.
So we actually, what we do, if we get that question, because they're like, well, this lender has this, we actually do go to the title company and say, can you give us a breakdown of the actual fees? Because the numbers don't lie. That is going to be what your closing costs are going to be if you're closing a home in Tennessee at this sales price at this loan amount.
And we have a free calculator on our website. If you receive a loan estimate and you want to verify that your fees that are being disclosed to you are correct, just go to our website. It's free. You don't have to create a login or anything. Just go to Quick Quote and you can generate your own buyer estimate on there using a loan estimate provided by your lender to confirm all the charges. And I've actually run the comparisons, and I mean, it's very accurate for the, and also if you're a seller, you can run your own seller nut sheet as well to get an estimate.
That's great. And where do they go to get that?
Just to hollingshead-law.com.
Okay. All right. Awesome. All right. A lot of good information in regards to title insurance, also fees. If you're a buyer or a seller, you want to know what you're netting. A buyer, this lender quoted this much in closing costs. This one quoted this much. Really, the only difference when it comes to closing costs is the lender fees. Are they charging discount points? What is their underwriting, processing, origination fees? All of the other third-party fees will be actual fees. And so if you have a lender that you're working with that are not giving you the accurate fees, then that is where there could be a misconception. And that's where I always say, compare apples to apples. And I'm always welcome to someone to send me the estimate. And usually that is when it's eye-opening and going, they missed $3,000 here, or they missed $2,000 here because it's an out-of-state lender and they did not know what fees are required here to close in Middle Tennessee. And also the tax rate, even though you can go online to do it, they just don't do it. They're
not doing it. And we don't have an income tax in Tennessee. So we do have that higher conveyance tax. It's the transfer tax that's paid anytime you record a deed or a mortgage. And so out-of-state lenders, if they're in a state that has that income tax, they have very low, if any, transfer taxes.
Right.
So they are very oftentimes miss that. Like you said, it's thousands of dollars that they miss.
It is.
Yeah.
All right, we're going to take a break. Stay tuned. We'll come back, and we're going to talk a little bit about what are the options when it comes to, do you have to have 20% down? What are discount points? What is the market doing right now? Stay tuned. You're listening to the Tonya Esquibel Real Estate Show right here on Super Talk 99.7 WTN. Welcome back to the Tonya Esquibel Real Estate Show, here every Saturday from noon to 1, helping families across Middle Tennessee, actually the entire state of Tennessee, expanded to Alabama and to Florida. So if you're thinking of a second home or relocating to Alabama as an owner-occupied, we can help you with lending. Kim is also licensed in Florida as well.
No, just licensed in Kentucky.
Oh, Kentucky.
Yes.
Okay. Thought it was
Yes.
Florida. Sorry. All right. So she can help you with the Kentucky from the title insurance standpoint. But no, our passion is to help educate, especially in this market. I continue to talk about how this market is so different than any market. I've been doing this for 29 years, but that doesn't mean it's a negative. There's always opportunities in a unique, different market. It's just making sure that you're aligned with the right experts when it comes to purchasing a home. That is lending, that's title, that's real estate, real estate agent, that is a builder, and that is where we want to be a resource for you. So give us a call, 615-300-0794, 615-300-0794. If you're just now tuning in, be sure and check us out on podcast, Spotify, also YouTube, and our social media to catch up on some previous shows, because our passion is to continue to educate you on this market and to add value so that way you can make wise decisions when it comes to purchasing a home. We would love to help you as your local team. But again, our passion is to help educate you. So when you are ready, or if you just have questions to help navigate through some title issues that we've been talking about today, please give us a call, 615-300-0794. So before we jump into what we were talking about with down payment assistance, I have one quick question from the first part of our show.
Okay.
So if that lender did do the deed incorrectly, that we were talking about opening up the show, can they quit claim the deed to a different, or would that do a due on sale trigger?
So, okay, so that's the problem. The problem is that the kids would have to join in on any deed that conveys.
Okay.
So there's absolutely nothing that can be done.
I meant right now, like if someone pulled up their deed listening to the show and saw that they had joint tenancy, is that what it is?
Oh, yeah. Well, we
they
do what's called a straw deed, where they essentially, like, they transfer title to me and I transfer it right back to them and to correct the vesting.
So you could correct the problem, yes. And it would not trigger the due on sale clause.
It doesn't not trigger the due on sale clause.
Okay, so that's really important. If you have your deed of trust, you own a home, please pull it out and see how it is recorded. And if it is not recorded properly, then what does that look like? Just call your office?
Give me a call. Give me a call, and we'll try to help, do everything we can to help you.
Okay.
Yes.
And a deed is a public record. So if they couldn't find it, could you just pull it up for them?
Yeah, we can pull it up for them. Like, all the records are online, and they can just give us a call.
You just need the address and the name? Okay.
Exactly.
Okay. Yeah, so give us a call, 615-300-0794. Protect your deed, protect your title, because you never know if something's going to happen. And the particular story that she was talking about is they were not married when they bought the home. The original lender did not draw up the deed correctly, and so they're married. They got married. The spouse has passed away, and now
now the kids
are
are
involved.
now owners of the house. They're on title, even though they're not on the deed. And so that goes back to what I was saying at the beginning of the show. So they're not on the deed. Their father's name is on the deed, but they're the title holders. So just, you look up a deed on the property assessor's website or on the tax records, you try to look at who's the owner of the property. That doesn't tell you who the owner is. The title company has to do that.
And say again how it was recorded incorrectly, because
So it was recorded as a joint tenancy.
and that's not
And that does
viable.
not, yes,
In
that
Tennessee.
that style of vesting is not available in Tennessee.
So if you
Can of worms.
yes, so if you don't have your deed of trust and you just want to make sure how it's recorded, if it's in joint tenancy, you want to be able to get that quit claimed over to the proper way to protect the title in case something does happen. And what would be your recommendation with that? Joint tenancy with first survivorship?
Well, we would do, you know what, they would just need to give us a call. We'll have a whole conversation about their particular
goals are.
situation is. It's like you say, everyone's financial DNA is different. Same thing with the title. Everyone's situation is different. We'll take a look at their particular situation and help them out the best we can.
Okay, that sounds great. All right, so that just, during the break, I thought of that and wanted to make sure, like, if
You're
there's
like, wait
any
a minute, how
clients
would they
out
fix
there.
it?
Yeah, how would they fix it? And be proactive instead of reactive, because your client's reactive right now because she had no idea.
Well, I actually have a question for you.
Okay.
Okay, so, everyone's talking about in today's market, interest rates are high, and they want to wait for the interest rates to come down. And but we know inflation continues to go up, and of course, as inflation is pushing home prices up, just like it pushes up the price of milk and car. I mean, everything goes up because of inflation, right? So we know that in a couple of years, it's going to be a huge boom in the housing market. We're going to see a huge rise in home prices. But just naturally, home prices go up regardless, right? So now that the interest rates are up and we're seeing prices start really, really stabilize. I mean, the market has cooled and we see a stabilization in prices. Let's say that I'm in a home that I've owned for a few years. It's a 3-bedroom, 2-bath, but my family's grown. I would really love a 5-bedroom home, or I would love to live in a different area of town, get in a different school district. And that house that I'm looking to buy is, say, 30% higher, more than the house that I'm in. And in my mind, I think, oh, I'm going to wait for interest rates to go down before I sell this house so that I can then turn around and buy the next house at the lower interest rate. But by the time that the interest rates go down, now you're in a competitive market again. Prices are going to
appreciated,
and the home is appreciated. That big house, we'll call it, as I'm from Alabama, so we'll call it the big house and the little house. So the big house is now costing 20% more, let's just say, conservatively, 20% more. And then the little house costs 20% more. But because that house is bigger and it's more expensive, the 20% is a much bigger number, right?
Yeah. So
if you were going to upgrade, would now not be the time to do it?
Now's the perfect time to do it.
That's what yes.
I mean, you're
right?
definitely in a market to where you're getting negotiations more than you ever have before in the past couple of years.
Right.
I mean, sellers, builders, even though rates are high, you still got to look at the savings and the discounts that you're getting. Like we talk about, some of the builders I'm working with are doing 20, 25. I have a builder that called me this last week, and they're offering $50,000. Now, obviously, this is a price point that's a little bit different, but even my first-time homebuyer price points, they're offering $15,000 to $20,000.
Wow.
To where you wouldn't have gotten that. And so you have to look at the difference in the payment. So if you look at a payment at a 3.5% rate versus a 7.5% rate, what does that really look like loan amount wise? But it might cost a little bit more monthly payment, but I just got a $25,000 discount on a home that 2 years ago I wouldn't. So how many years does it take you to recoup that? And what we try to educate people is too, okay, you're going to get a higher rate right now, but you're getting a 20, 25, whatever you can negotiate to get a discount. That's common that I'm seeing. You're getting somewhere between that range, especially with new construction. Resale has not caught up to that as much, but new construction, you're really seeing that a lot. And so you can always refinance.
Later on,
Yes.
but afford the house now.
Yes.
Make sure you can afford the house today,
Yes.
and then refinance later
And
to
negotiate
save money.
and get a really good deal on a home,
That's what I'm
because
saying.
a home is going to appreciate every single year. So if you look at a $500,000 home and say it's a 10% appreciation per year, that's $50,000. So if you wait a year thinking rates are going to come down, is that home going to be $50,000 more, to where the rate difference between a 3.5 to a 7.5 might have only cost you $10,000?
Right.
So you left $40,000 on the table
And
because
that's my
you want to
point.
think that, oh, I want to wait until rates come down.
Right, because they're so focused on rates and they're looking at that total amount that they would owe on the loan, but they're not staying in the loan for 30 years.
No.
Everybody knows that they're going to refinance in a couple of years, or they're going
Or
to
sell it, move
sell it in
up.
5
Yes.
years, 7 years, I think is the average, right? So then they're
It's 3 to 5 years.
yeah, they're not going to stay in the house for, the whole 30 years. So yeah, it's like you say, it's like a difference of what, $10,000 a year for a couple of years, but the home is going to appreciate much more than that every
That is
year.
correct.
And is it not also a great time to step into investing? Because like, let's say that your current home is a great type of a property that would be good for a long-term rental. So then you can pull out a home equity line of credit, because you've had that, you purchased that home, you got the great interest rate, and you can stay in that great interest rate, still buy the big house, and then rent this one out.
Because you got the low rate on it.
Because you got the low rate, so you
Yeah.
don't have to let go of the low rate. You can still make money on it.
And I would probably recommend in this environment, if that was a scenario, just depending on what their cash flow was, I would recommend not doing a home equity line of credit, because prime is 8.5%.
It is,
Everything
yeah.
is prime plus 1, so that's 9.5%. So why not go in and do 5% down, even FHA, 3.5% down if your current home's not FHA. Do the minimum down, get the rate. We're in the mid sevens right now. That's better than, a HELOC at 9.5%
So
for your
you
down
can still
payment.
do that even if you're a current homeowner.
Yes, you can.
See, I didn't even know that.
Yeah.
That's such a common misconception that I didn't even know.
Because you're converting your owner-occupied residence into an investment because you're moving to a different owner-occupied residence.
Wow.
So that is what I recommend. Do the minimum down payment. And then when rates drop, if they drop, no one has the crystal ball, then you can always refinance and pay down more principal if you want to.
Right.
But at the interim, I would do a minimum down payment.
Right. Don't wait for the house to continue to become more and more and more expensive.
Yeah. And rental rates are continuing to rise.
Yeah.
So if you're that person that's got a 3.25, it could be a great time and a great point that you pointed out to become an investor in real estate.
Yeah.
Because when could you ever get a 3.25% interest rate? And now it's an investment property.
Exactly.
Yeah. All right. So if you'd like to get some more information on how to increase your real estate investment portfolio, give us a call, 615-300-0794, 615-300-0794. We're going to take a break and we come back. We're going to be wrapping up our show today. But again, if you missed it, we will tell you how to get in touch to hear the entire show once we get back from our break. Stay tuned. You're listening to the Tonya Esquibel Real Estate Show right here on Super Talk 99.7 WTN. Thank you so much for tuning in to our show today, our spooky Halloween show. My co-host in studio with me, Kim Hollingshead, Hollingshead Associate Real Estate Attorney. We've been talking about how important it is to protect your title. If you do not know how your deed and title is drawn up and has been recorded, Kim can help you make sure that you are proactive and protect yourself versus the story of this couple and this lady that lost her husband that is dealing with a really challenging situation right now due to the lender and the title company not advising them correctly. So you can always give us a call, 615-300-0794. If you missed us, you can go to Spotify, podcast, our YouTube, social media channels, watch some reels. Our passion is educating and trying to bring value. If there is anything that you would like for us to cover here on the show to help educate you, you can always go to our website. Also give us a call or fan text at 300-0794, 300-0794. So as we're wrapping up the show, Kim, I had a really exciting week. I got to go and do a training for one of my favorite builders. I love my builders that I work with. So I don't mean to say like the favorite, but just I love my local builders. They are just so great. Their sales managers are so good. Their sales agents are so eager to learn. And it's because of the leadership from the owner and the builder of the company and the sales management team. So it was really interesting because a lot of times you go into a training and you're standing there and you're putting on this presentation. And so I just think that's so boring. And so we started and I was like, we're going to kind of do this informal. And I want to start with your questions because financing is so challenging right now. Interest rates are different. Lending, banks are lending, they're not lending. This lender's approving this loan, this lender's denying this loan. Like, why is it so different? So I'm going to start off with opening up a question for you guys, what you feel like you're challenged with. So the very first question was, I don't understand discount points because I thought if someone paid a discount point, 1% discount point, it would change the rate by a whole percent. So that's a misperception that's out there because no one's paid discount points in over 20 years, right?
Right.
And the reason is, and we went into that, is because historically, prior to this market the past couple of years, no one paid discount points because it only changed a rate 0.25%. Mm-hmm. A discount point is 1% of the loan amount, but it does not mean it's going to change your rate a full 1%. So no one paid discount points. And so now it's an education to help people understand what is a discount point. And a discount point basically is you're buying down the rate below the market rate, but it does not mean it's going to reflect directly as
A full point.
Correct. So you're looking at people paying discount points now because it could be a half to 3/4. Some cases may be a full point. But that was interesting because a lot of consumers think if I pay 1 point, I get 1% less than what the market rate is. But that's not the
wouldn't
case.
that be a dream?
Yes, it would. But the reason people are paying discount points now is because the recoupment period. So if historically it's only a 1/4% difference, it would take you 7 to 8 years to stay in that home in that same mortgage to recoup what you're paying at closing. Yes. So now if it's a half to a full percent, that puts you into a 3 or 4 year window. And that is why it's more attractive. The other side of it is the actual mortgage industry, the bond industry is pretty much forcing discount points to be paid up front. We used to have different rates, like lenders used to do lender credits of like 1%, 2% because we had premium rates. But because the rates have risen so much, we don't have premium rates. And so it's actually a cost sometimes to even get a rate.
Wow.
And that's where discount points come into play. But it does not necessarily mean it's a full percent blow.
Wow.
So that was one of the first questions, which was a great question. Another question was about PMI, but we can save that for another show, just the difference between private mortgage insurance, FHA mortgage insurance. Another question that I thought was a really good question, and this leads me back to years ago, I used to do on the show called Deal or No Deal. And we would get this scenario, and the client would come to us sometimes denied 3 or 4 times. And we would figure out, can we make this a deal or a no deal? And so we had lots of success, but I mean, you can't turn every deal into a deal. But I encourage people in this environment because one of the questions was, why is it that everyone has the same guidelines, but some people can get loans approved and some people can't? Because you all operate under the same guidelines, right? FHA is FHA, VA is VA, conventional is conventional.
Sure.
Yes.
We do. Same thing with title insurance. I mean, we all operate under the same guidelines as well. Why can I get something closed, another title attorney can't? I don't know how to explain that.
Well, I explained it as one, the first person a client talks to is a loan officer. So if the loan officer just got in the business a year ago, 2 years ago, they could be an encyclopedia and know every single guideline. Someone could be in it for 20 years.
And not know any of the guidelines. Yes.
Because they continue to change.
Yeah.
And so it really starts with not so much the bank or the mortgage company. It really starts with the loan officer.
And how you package that loan for underwriting.
That is correct.
The same thing for us. I mean, I'm just had a deal come through my office that 2 other title companies said no to. Unfortunately, it was a Mexican client. And so she didn't speak English. Everyone involved has a Hispanic last name. And so it just was a high risk. They felt that it was a high risk transaction. But when I was able to package that and get it to the underwriter, then they were fine to approve it. But it's all in how you package it, isn't it?
It is. And that's what I explained to them. I go, I look at a loan as a puzzle. And if I submit a bunch of missing pieces to this puzzle to an underwriter, they're not going to understand the whole thing.
Right.
They're just going to see this and this, and they're not going to know how to connect it to make it look like a really good picture.
Yes, there's a skill in this.
There is a skill in it. And it starts with your loan officer.
Yes.
And that is the person that you cannot call and talk to your underwriter. You start with your loan officer. So if the loan officer does not know how to prepare it to make it a beautiful picture, put all the pieces together, or to package it properly, then that is where you see people getting denied. And either they don't have the knowledge, they don't get creative, they don't ask the right questions. So my most recent client, we got closed in 2 weeks. It was really, even though they had a relationship with that bank for over 30 years, the loan officer just did not ask enough questions to understand the full story. And
yes, this is what I said to the realtor the other day on my situation. I said the same thing. I said, look, sometimes you just got to know the right questions to ask.
Yes.
So that you can get the information that you need to answer the underwriter's questions before they even ask them. But it's all about the questions you ask, the quality of your questions.
Yes.
You're absolutely right. Yes.
And then when they're telling your story,
Yes.
my brain's like, red flag. how are we going to work through this? Oh, we can work through this. But it leads me, when I hear a red flag, it leads me to my next question.
Yeah.
With just in conversation. And so I think that's just where you've got to know your guidelines. You've got to make sure that you're asking the right questions. And so many loan officers that's gotten in our industry in today's time, they just read the computer and what the client puts into the computer. But a client does not do loans all day long. They're inputting what they know to input. So
Right.
if
They're
it's like,
relying on you to be the expert to tell them.
so if you're just looking at their application and it says they make $10,000 a month and you don't have any documents, but you say you're pre-approved, but then come to find out they're 1099 because you never asked them if they're 1099. I mean, there's just so many things out there. Or they put in their base pay at a net amount, not a gross amount. I mean, you have to go over their application. So I only use the online system for them to do the application just from a compliance standpoint. But I want to go over their credit. Like some clients have come to me that's been denied by another lender just because they were counting something in their debt ratio that was paid off, but they just never asked them if it was paid off because they never took the time to go over the credit report.
So I mean, that's got to be so infuriating as a borrower to just be like, why didn't you just ask the question? I'm the consumer. I don't know.
Well, what happens if you apply for a loan and you get denied? You don't want to try again. Like that.
Sure.
That is, I mean, you feel defeated and you're just like,
embarrassed.
Yes, embarrassed. And so I think the point of this is there's a lot of clients that are out there right now that are experiencing inflation, experiencing the tightness and more cost.
Yes.
And have maybe said, you know what, if this is my chance to buy a home, I want to step out and buy a home. And they did. They were brave enough and courage enough. But if you got denied, don't let that one denial stop you. Please get a second opinion, because literally there's 2 clients this week that banks denied that we were able to get approved.
Yay.
And so that makes me so happy because they had the courage to step in and get a second opinion. It's kind of like when you go to the doctor and they don't give you the best news that you want, and you're like, I'm just going to do what he says. Or do you say, let me just get a second opinion to make sure he's accurate? And if second opinion comes out that the first person was accurate, then at least you know. But maybe at least you get some value from the second opinion to help you get ready sooner than later.
Yeah. Yeah.
So
We do.
Yes.
I think that's great advice, Tonya.
Yeah, so give us a call, 615-300-0794, 615-300-0794. I thank you so much for tuning into our show. Thank you, Kim, for bringing so much value. Again, check us out on Spotify, podcast, our YouTube, our social channels, and tune in every Saturday from noon to 1 right here on Super Talk 99.7 WTN. Be sure and have a blessed week, and please keep Israel in your prayers.